York City supply is at its lowest for this time of year in over a decade. We saw a big drop in inventory last week with 10% of the listings being taken off the market, or were they? So where have the Manhattan and Brooklyn listings gone? While it's not unusual for sellers to take a pause in August, which is one of our slowest times of year, there is something else going on. Let's take a look. Welcome to this week's look at the state of the New York City real estate market. If you are an active buyer or seller, or you're just curious about what's going on in this market, be sure you stick around. Let's start with the numbers from last week, and we might as well begin with the luxury market. There were 26 contracts signed. That is 3 more than the previous week. Condos outsold co-ops 19-4, with 1 condo and 2 townhouses also signed. As I mentioned, the supply took a dive. We are at 5,191 properties. That is down almost 18% year over year, with 10% of the active listings being removed from public platforms into a Real Estate Board of New York RLS status known as participants only. And I will get into more on that shortly. Here's some things to know. Sellers, the inventory is below, as I said, almost 18% below last year. This is your strongest tailwind yet. Take advantage. Buyers, 55% of the inventory that is on the market actively is stale. Target those listings that have been on the market for at least 90 days for leverage. In Brooklyn, the supply dropped 4% week over week to 3,417. Essentially, it is flat year over year. For sellers, you're going to want to really be sure that you're well priced, because your listing will stand out if it is well priced against, especially when you compare it to those stale listings. Buyers with 48% of the inventory stale, again, look to those listings that have been on the market at least 90 days, and that is where you will find some leverage. The standouts this week, we'll start with luxury, and then we're going to talk more about this drop in inventory. Luxury does remain active. The new development inventory is beginning to tighten. The number 1 contract was the 19th floor at 1122 Madison Avenue. It was asking $40,500,000. This is a condo with 5,251 square feet, 5 bedrooms, 5.5 bathrooms, 2 balconies off a corner, 40-foot great room, and an eat-in kitchen. The unit has 11-foot ceilings and Central Park views. The amenities in this building include doormen, lower-level fitness center, squash court, training studio, cold plunge pool, steam, and sauna. Half of the 3rd floor has other amenities: a bar, a lounge, billiards room, playroom, dining room with a kitchen, media room, and a game room. Since mid-January, 24 out of 26 units have gone into contract, and the building is expected to be completed by the fall of 2027. Demand has rebounded. Contracts are up 10% week over week to 192, still down almost 7% year over year, but this tight inventory is definitely going to change the dynamic a little bit in terms of supply and demand. So sellers, be aware that the under 1 million price point still dominates at 49%, nearly half of all the deals. And buyers, if you're focused on the luxury market, that 4+ million price point and up, that seems to be rising. As I said, the luxury market is still doing quite well. Inventory is being absorbed there. Keep that in mind if you're focused on that part of the market. Perhaps sooner rather than later would be good to make your move. In Brooklyn, we saw contracts rebounding, also up 8% week over week to 122, and overall up a little over 6% year over year. Sellers, the under 1 million contracts being signed leads at 43%. This entry level seems to be moving most quickly in Brooklyn, and buyers be aware that the 2+ million is at about 25%. So in Brooklyn, that represents the entry level for luxury, and that demand also is remaining strong. So we're seeing a shift in the mortgage rates a bit. Both rates are rising. The conforming is 6.69% now. Jumbo 6.74%. The spread is now at 5 basis points. Sellers, rates are climbing. Be sure you're pricing in alignment with the market. That might help to make up a bit for any buyer hesitation. And buyers with the jumbo at 6.74%, 5 basis points above conforming, that is starting actually with both rates going up a bit. Not sure how that's going to change it for all of you, but do be aware that there are some rumblings, let's call them that we will start to see the rates go up a bit more. Can't say for sure, but this is what we're hearing. Why are a good number of Manhattan and Brooklyn sellers pulling their listings off of the market? As I said, August is a slow time. Rather than simply delisting their home in August, some sellers have opted into something called participants only for the month of August. This allows them to continue to market their property to licensed agents within the network who are able to view the property details, able to bring their buyers to your listing, and arrange for private showings. This could well be a very good option, certainly for, let's say, new sellers who don't want to come on the market in August publicly, start racking up those days on market when perhaps there won't be quite as many buyer eyes on their property. In August, it allows a new seller to test the market without racking up days on a public platform. Still get their property in front of buyers and their brokers, because even if a buyer isn't in town, let's say they're on vacation, it still allows their broker to be aware of it, find out what's going on with it, perhaps bring their buyer if they're back in town from their vacation, or wait until they're back, but at least you're not under a rock, I guess is what I'm trying to say. And it goes without saying that this is also a very good platform for those sellers who really don't want to come off the market, been on the market for a while, they're not really having the success that they want, but they don't really want to come off the market totally. They want to continue to see if there are buyers out there who are interested in their property. And it's also a good opportunity for them. And from a buyer perspective, we know that the publicly listed inventory is pretty low right now. But we also know that there are opportunities out there. They're just not publicly visible. Your best bet is to work with an experienced agent broker who understands where the opportunity is, who can help you find those listings. If you don't see something that is, visible on the internet, good chance an experienced agent will be able to help with that, because they will also be able to see where the inventory is. Couple charts. Manhattan. Now, this is really addressing supply, so we've kind of gotten into that inventory, right? We see that the Manhattan new supply is down 22% market-wide, and you can see it by neighborhood, right? The Turtle Bay is kind of leading this pullback at 41%, while the East Village is totally in the opposite camp, up 92%. That's good if you're buyers or a seller, right? Like if you're a Turtle Bay seller or buyer, if you're a buyer, you're not going to have a lot of choices. If you're a seller, that's good. You don't have a lot of competition. Whereas in the East Village, if you're a seller, you're going to have a lot of competition. Buyers, you have a lot more options. In Brooklyn, the new supply is down 7% market-wide. Borum Hill leading that pullback at 62%, while Bay Ridge is up 63%. Same thing holds true here. If you're a seller in a neighborhood where there's not a lot of inventory, and these charts are great because they will show you where the pullback is, if there is some, and it will tell you where you're going to have a lot more competition if you're a seller. I think that's all really good. So you should check these charts out a little more thoroughly if you are an active buyer or seller. You can always also reach out to me. I'm always happy to get a little more granular with you, answer any questions about that. I'm also happy to answer any questions about the participants only, if that's something that you're curious about, thinking about, again, whether you're a buyer or a seller. That is it for this week's look at the state of the New York City real estate market. Post your questions below, or you can reach out to me directly at Sotheby's. And as always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what is happening in the New York City real estate market. And if keeping up to date with the New York City real estate market is important to you, be sure to subscribe so you don't miss any news about what is happening here. Until next week, take care.